What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we saw a strong bounce across the board in the indices and we're starting to see the VIX closing below 30. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 2.2% and we did come back up very close to that resistance level at 428, which is going to be a very critical resistance. The last two attempts for the bulls to get above SPY 428 were met with rejection and price action pushed lower. So this time the bulls are more than likely going to try to get an overnight gap up above that level so they don't even have to deal with that resistance, but that is going to be a very critical level you want to pay attention to. Above 428, you want to look for the 20 simple moving average at 430 and the full gap close just below 434. Above the gap close, we'll have the bullish breakout above 438 and the 50 EMA is now sitting just below 441. So those are going to be your most critical resistance levels. One day bouncing like this is not going to reverse the strong downtrend, so don't be getting overly bullish just because we see a bounce. Remember, volatility works in both directions and we were coming off a strong support, so it's completely possible to see volatility working in both directions, and we did see that with the strong bounce today. That doesn't negate the bear trend and it doesn't tell us we're out of the woods yet until we start seeing confirmation with bullish price action. So try not to get overly bullish just because we had one strong bounce. Continue to watch these very critical resistance levels. To the downside, you want to watch these support levels at 420, 416, 411, and below 411 you're looking for our price target and gap fill at SPY 400. Jumping over to the NASDAQ 100 triple Qs, you can see we were up 3.14% today and we did close back above the 5 EMA and we are starting to see a bounce off of the retest of that level at 318. So far there's going to be the possibility that that is going to be the bottom, or at least that's going to be the strong levels the bulls are going to defend. Remember, we still do have an open gap, which is our price target at 315 as long as we have the bear trend. So just like on SPY, try not to get overly bullish just because we saw a one-day bounce. From here, bullish breakouts will be back above our 20 simple moving average, which will be above 338. And then we'll need to see the triple Qs getting back above 347 and 351, which is going to be our 50 EMA. So there's still a ton of resistance above and we still do have the strong downtrend. So bears are still going to show up at these critical resistance levels. So the bulls are not completely out of the woods just because they had one day bounce. To the downside, look for support at 323, the retest of 318, and then our price target and full gap close at 315. Yesterday, we were so close to closing the gap that you could smack it with a stick, but after today's strong bounce, you're gonna have to throw that stick to close the gap. Below 315, you're looking for the trend to continue down as we go to the next price target at 308. However, 315 should be a very strong support level, so don't just assume we have to break down through that level if we do come down that low. In the Dow Jones, we were up 1.85% today, and we see the Dow Jones looking very bullish today, coming all the way back up to the 20 simple moving average, but so far that level is holding up as resistance. If the bulls can get the Dow Jones back above the 20 simple moving average, that'll be a close back above 336. And then you'll be looking for a retest of resistance at 340. And above that, you have the 50 EMA right around 343. So those are going to be your most critical resistance levels. We still have the downtrend, but we're starting to see signs of a bullish breakout. So if the Dow Jones can hold above 333 and get those bullish breakouts above the 20 simple moving average, we could start to see the bear trend reversing, which means the Dow Jones will start giving hints that we could be due for a counter trend relief rally. If we break down below 333, look for a retest of support at 326, and below that you have the strong support at 322.6. In the Russell 2000, we were up 1.59% today, and we still see the Russell 2000 closing below all the moving averages, and we still have the bear trend. And to the upside, you're still looking for resistance at the same levels at 197, 200, and our 50 EMA is now sitting right around 203. Above 203, you have the bullish breakout above 207 and bullish confirmation on a close above 212. To the downside, you have support at 191, and if that level does fail, you're more than likely going to see a continuation of the bear market in the small caps and start trending down towards 170 with support on the way there at 183. On the Arkk ETF, we are up just over 4% today, but we still have price action below all the moving averages and we still have a strong downtrend, so there's no reason to be getting bullish on this ETF. Bullish closes are going to be a close back above 64 and then back above 71, so don't even think about getting bullish until you start seeing bullish price action. To the downside, we have the price target at $50, and if that level breaks down, we're more than likely trending down towards $40. This is a strong downtrend in a strong bear market, so never rule out how low this can possibly go. On the VIX, we were down just over 6% today, and we did see the VIX closing below 30, so this is going to start looking bullish. The lower the VIX goes, the more likely we'll get a bullish breakout, but our bullish confirmation isn't until the VIX gets back down below 24 and then closes below 20, so there's still a lot of work for the bulls to do. Now, if the VIX starts spiking back up above 30, we still do have the bull trend, and this could all just be a bull trap. So try not to be getting overly bullish while the VIX is so close to 30. You can get a lot more bullish as the VIX continues to get crushed down and takes out this previous low just below 28. On Bitcoin, we're currently down about 0.5%, trading just above 39,000, and we're back above our 5 EMA, and so far we're holding above that critical support at 37,000. Remember, on a break below 37,000, we're getting bearish because of the double top, which means we're more than likely going to see Bitcoin trending all the way back down to 30,000. You can get a lot more bullish above 45,000 with resistance on the way there at 40,600 and the previous daily high at 42,000. On NVDA, we were up 7.7% today, and we got another very strong bounce off of that support level right around 210. And so far, this bounce is looking very bullish. We closed back above the 5 and the 13 EMA, and we're very close to retesting the 20 simple moving average. So the next bullish breakout will be a close above 234 and then a close above 245. The next time we get back above the 50 EMA, we could start to run, and we definitely have a confirmed double bottom look if we can get back above about 244. So watch that as a very critical breakout resistance. To the downside, you still have support at 223, 210 to 209, and below that, you're looking for the price target at 197 and 192. On Tesla stock, we were up 4.63% today, but still closing below all the moving averages and still in a strong bear trend. And so far, it just looks like a bounce off of support at 763. If we can get back above our 20 simple moving average, we'll have a bullish breakout above 838. And above that, your next bullish breakout will be a close back above 900. Don't get bullish until we can at least get back above about 827. And to the downside, if we break below 763, you're looking for a retest of 709, and our price target is still 592 as long as we have the bear trend trading below $900. On Apple stock, we were up 2.97% today, getting rejected at the negatively sloping 5 EMA and still in a bear trend. So don't trust these bounces just because they're strong. We still have bear trends across the board, and price action is still looking relatively bearish. In order to get bullish on Apple stock, we'll need to get back above 162 and then back above 165 with resistance on the way there at 157 and 161. Now to the downside, you're still watching support at 152.7, and if we break down below that, look for a retest of the low at 150, and below that a retest of support at 147. On the financial sector, we're up 1.41% today, and we still have a gap to fill just above at 37.6, so it looks very likely like we could fill that gap soon. We still have a bear trend, so that gap fill could be resistance, and we could continue to trend lower, and your next bullish breakout will be back above the 50 EMA. On the industrial sector, we were up 1.59% today, coming all the way back up to our resistance trend line. The next time we break back above the 50 EMA, we could get a bull trend, and we could start trending up there to close the gap at 106. The healthcare sector was up just about 2% today, getting back over the 200 simple moving average and reversing the bear trend, so this is definitely looking like a bullish breakout. The longer it can hold above the 50 EMA, the better, to develop a bull trend and start trending up to close the gap at 141. The energy sector was down 3.66% today, closing just on top of the 20 simple moving average, and you can see the energy sector does look like it's trying to roll over. We still have the bull trend, and we're still above the support trend line, and we do have a gap to fill just above at 73.6. So this is definitely not a dead bull market just yet, but it's definitely showing some signs of weakness. So jumping back over the S&P 500, while today was a very bullish bounce, it should be expected that volatility works in both directions, so try not to get overly bearish as we come into strong support. We have a lot of catalysts this week with FOMC and quad witching, and we can't get bullish until we see a bullish breakout and reverse the bear trend. We could be very close to getting a bullish breakout, but let the price action prove it and try not to make too many assumptions. Remember, the trend is your friend, and there's no reason to get overly bullish as long as we're in a strong downtrend. So watch those critical resistance levels and watch the price action accordingly, and you'll know exactly how to trade this market, whether we go higher or lower from here. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. If you're interested in finding out more about Bank Trade Alerts or how to subscribe, you can find out all of the information by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode. The episode's over. What are you still doing here? So just because you stuck around to the end, we'll take a quick look at Amazon stock. And as you can tell, Amazon stock is still in a bear trend. Right now, we're looking like we're going to retest the 20 simple moving average. So look for strong resistance at 29.66 and your bullish breakout back above 3,000 and 3,055. Now to the downside, you're looking for support at 28.88 and the full gap close of support at 28.05. And as long as we can stay above this low right around 27.20, there is the possibility we could be working towards a bullish breakout. However, this is still a downtrend and we still do have a price target at 26.05 until we lose the downtrend. So try not to get overly bullish until we at least close the gap, show signs of a bounce off support, and then get that bullish breakout back above about 29.70. Otherwise, wait for the bullish confirmation and the break and close back above about 3,055.